Good afternoon, everyone. This is a pre-market trade, about 8:40 in the morning. I was trading micros today. We start off with 4 getting long out of this low. Basically, what I'm looking for is price to trade up to that red line, and then the second red line would be the second target. So I have 4 micros on from that low around there, around 56 or 56.75s. And then I'm looking to add full size NASDAQ contracts on a retracement. So this is sped up pretty fast because the market wasn't moving too quickly. So in order to save time and not bore everyone, I sped it up pretty quickly. So you can see the time in the bottom right and in the middle of the screen, how fast the seconds are counting. So you can get an idea of how quickly things are moving. This is a 30-second chart that you're looking at here. So I'm looking for price to trade down into that green line so I can pick up some full size NASDAQ contracts along with my micros. I rushed my entry a little bit right there and bought as we started to pull away from it. And of course, it immediately goes straight to it. So that was a mistake on my end, rushing my entry like that. And so what I'm looking for here is for these candles to start getting some good buying out of here. I want to see these candles start to get bigger and bigger, moving away from my entry. And as you can see, we're not getting that. So that's why I'm hovering over the exit at market, because I noticed the price action slowing down. It doesn't seem like it's in a rush to go anywhere. So I'm becoming very hesitant and moving my stop up closer. So risking about 8 points or so. Yeah, so I just got filled on my stop right there for those 2 contracts. And then I immediately enter short because if I'm getting stopped there, then price is likely to gyrate lower. So I add to 4 contracts. So I got stopped out of my micros and my full size, and now I've reversed my position and I'm short 4 contracts. This type of trading happens when the market is lackadaisical and has no real motivation to go anywhere. So in other words, not a good time to trade. And I'm slowly realizing that as I add another 2 contracts to my short position right there. So now I have 6 contracts short, and we're aiming for price to trade into new lows. We're taking a little bit of heat right there, roughly 5 or so points, 6 points max maybe, on 6 contracts. So not too terrible, but this type of market is what I generally try to avoid because it's consolidating and moving slower. But it ends up pulling down to those lows, and I peel off a contract when it touches the gray box, and then I pull off another 2 contracts as we start selling into the lows. My remaining 2 short contracts are purely profit here. So the 4 contracts of profit paid for the loss I sustained on my long and paid for all my commissions. So I'm going to move my stop to break even on these last 2 contracts and wait for it to break that low and take profit into new lows. And because of market conditions, I do not get my fill right there out of that low to exit because it does not break the low. And my stop is sitting at maybe a couple ticks of profit just to pay for commissions. And if I get stopped out of this, it's break even. So this was a good example of how me being wrong today still didn't cost me any money at the end of the day, because I was able to extract my loss back out of the market and profit at the end of the day, even if it is only break even. Hope that helps.